folks. This live stream is brought to you by my sponsor AAA FX. Now, they're a fully regulated broker in Europe and South Africa, offering Forex indices, commodities, crypto, and over 100 stocks. Now, at AAA FX, you pay no commission on any Forex pair using their ECN Plus account and low commissions on cryptos and stocks. Plus, you can deposit with cash or crypto, get a free VPS with deposits over 5K, and easily integrate the well-known copy trade service Zulu Trade. While you're waiting for the stream to start, go and check them out by clicking the link in the description, comments, or visit AAAFX.com.
Good morning, everyone. How's everyone doing today? Happy Wednesday.
Happy FOMC day. Big, high-impacting news this afternoon. Create some volatility in the markets, much needed. Given a lot of choppy price action of late.
Yep. Good morning, everyone. Hello. Thanks for hopping on with us this morning. This is our last midweek live session of the year, and we will be done after Friday. When market closes Friday, we are done for the year. We will hold one more live session on Saturday for you all, and then after that, we're done. We'd like to take some time off towards the end of the year because, it's holiday season, like to spend time with family and friends, and markets are relatively slow, low volume. Low volatility. So we just like to take the latter half of December off and take the first week of January off to kind of let the market settle in. So we will be back on the 9th of January. So just in a few short weeks, but we will be taking some time off. So definitely do be utilizing these live sessions. We will hold one last one on Saturday, and we're going to be doing a big giveaway, our Christmas giveaway, so be sure to hop onto that. You're not going to want to miss out on that one. But you guys know the drill. Where are you guys from? What pairs you guys looking at this morning? Drop it in the chat. I'd like to get this going.
Got Phyllis from Kenya. Nice. Good morning, Phyllis. Or afternoon, I think, where you are. Hey, bro, how open two positions, sell, boo, how trade news? Yeah, I can't help you on that one.
All right.
Sorry.
Atlanta, Georgia, Wisconsin. What's going on, guys? USD, JPY, Euro, USD, Euro, GBP. Charleston, South Carolina. Nice. That's right. What's going on? Mr. Pearson, how we doing? Gold. All right.
Oh, my God.
Aiden's cracking up this morning. You guys are funny.
Colombia, show the system. Wow, y'all. Wow, patience is a virtue. Currently sitting on my hands after yesterday's volatility. Yeah, I mean, higher time frame objectives, especially on the majors, with that CPI news event now.
Yeah,
you think it's a coincidence
yesterday?
Yeah, exactly. I think it's a coincidence that all of these higher time frame objectives have been met right prior to FOMC across the board on the majors. I think not. You got Portugal.
Yeah. I'm definitely probably going to be sitting on my hands as well today until the news event comes out. Obviously, we know news is just used as the excuse to inject volatility. However, we've come into higher time frame areas of interest yesterday with that CPI news that was released. So I'm probably just going to sit back today, see what kind of reactions we have from these higher time frame levels. We've had a lot of take profits hit yesterday, especially on EU, AU, a lot on the majors. So since we've already reached our objective levels, the question is, are we going to continue, or are we going to reverse from these objective levels and reverse? So just want to see what the news event provides. Obviously, the news events are not random. They're already pre-planned. However, I am just a little confused as to where the direction of the market is going to go next, just because we've come into these higher time frame levels. So even if news wasn't a factor here today, I still would be a little careful in looking for my next trade opportunity, because it could go either way. I want to find more of a direction in the market first before continuing to trade. And I think the news can provide that injection of volatility to kind of spurt some sort of, directional bias in one direction or the other. So after today, we'll have a probably good idea of where price will be headed, and we can continue there.
And likely some form of retracement, right? I mean, we've seen some kind of real expansionary moves really across the board on some of these majors, right? And so, we've kind of just been trickling up without any higher time frame retracements on, things like EU, GU, AU, et cetera. So oftentimes news events like today will be that excuse to then propel price in terms of a higher time frame retracement. So in my opinion, we're going to see some downside on things like Euro USD and GBP/USD, especially given the fact we've come into higher time frame objectives. And we've been just kind of mooning for quite some time now. So I look at it as the excuse for that volatility injection and going ahead and filling up some imbalance that's been left unaccounted for and providing that discount.
Yep. All right. We got Romania in the house. We got Canada. Good afternoon, guys. Good morning.
Nice. Romania. That's a first. I've been there.
Does the first hourly candle of the day have any significance, or is it speculative of the movement for the day? I wouldn't say it's not about, time frame candlesticks. If your question was, I wouldn't say legit, but if your question was like real, then why can't it be the 2-hour candlestick? Why can't it be the 4-hour candlestick of the day? Why can't it be the first 5-hour candlestick of the day, the first 15-minute candle? It has nothing to do with the first hourly or 2 or whatever. It has to do with sessions. So we have to understand the sessions and session liquidity, highs and lows of sessions, highs and lows of the day, highs and lows of the week. Those are going to be very key levels for liquidity runs. So I would say, as we approach Asian session, usually that's a relatively choppy session. Not much movement, not much real movement in the market. A lot of volatility comes into play during the London and New York session. So usually Asian session liquidity is run. Having that understanding, we can put together some sort of setup if a setup does present itself where maybe London session takes out the Asian session high, then goes and takes out the Asian session low, and then continues higher. That's a clear buy to sell to buy. So continuation in the upside direction, we would look for pullbacks to mitigate to go long. So that's just one kind of institutional clue that we have seen time and time again that have based upon session liquidity, not necessarily the first hourly candle of the day, but more along the lines of session. So all right, we're going to go ahead and get started here, guys. We have quite a bit of people on. I'm going to go ahead and unfortunately, guys, we don't do anything but Forex. Please do not ask me to do any of gold or US 30 or NASDAQ or whatever. We don't do that. I don't trade everything and everything. I'm very specialized, which is why I do so well in Forex, is because I don't trade a billion different things like a lot of other people do. It's better to be specialized instead of diversified in that sense. So just like to stick to Forex. It's Forex pairs move very well in terms of smart money. Everything has smart money. I mean, even NASDAQ or US 30 does, but Forex just presents it in a better way. So I just like to stick to that. So honestly, guys, I really don't have much in terms of what I really want to talk about today, just because, today's FOMC, there's no clear setup, in my opinion, really across the board. We've hit a lot of TPs yesterday, so we're out of a lot of trades. What I'm going to do is leave it up to you guys. What pairs do you want me to kind of discuss? I can go over some pairs that you have. I can go over GBP USD like you have there.
Yeah, I mean, I think FOMC is going to really shake things up and kind of create the narrative, right, in terms of kind of trend and proper wave play for, the foreseeable future. So right now, where it might not be clear, oftentimes we'll have that kind of behavior prior to an event like today. And then the volatility injection kind of clears things up for us for, the next kind of quarter or so. So no need to force anything. We've hit a lot of take profits and a lot of trades we've been talking about for a long time. So just relax. There's no need to be in a, it's not a necessity to be in a trade right now.
Yep.
Never is unless all of your rules are met. So we'll just see what this news event does, especially on some of these kind of exotics and crosses where we've been seeing a lot of consolidation, choppiness, not really clean wave play. I would expect FOMC to kind of provide some clarity in terms of the narrative on those, as well as, the US dollar essentially rules everything in the FX markets.
Yep. Over the end of the break, do you remove your pendings? Yeah, anything that I'm not currently in after this Friday, just because it's the end of the year. It's the only time we take a break throughout the entire year. So at that point, yeah, I would remove all pendings. I'll leave any open positions running and I'll manage them out. But in terms of pendings, yeah, I'll just close them. I just don't want to deal with them. Not to say they're not valid. I just don't want to deal with them over the break. All right, I'll go ahead and get started. I see a lot of pound pairs. So I'm just going to go over all the pound pairs. Just a quick, I guess disclaimer here. I don't really see much across the board in terms of setups, and we have FOMC in a few hours. So I'll go over these pairs for you, no problem. However, there's not going to be any areas of interest most likely. So we can talk about it, kind of see direction, but I can't really give you much of an actual setup on these pairs. There's not always a setup. So we'll go ahead and get started here. I'll go over, I'll talk about HF. I do want to talk about HF at some point. But let's see, the first pound pair I have here is Euro GBP. So Euro GBP is, has been in a massive, at least counter trend, downtrend for quite some time. We are still higher time frame bullish, as we can see, we're making higher highs and higher lows. However, I want price to come into this 0.85 region. All right, for quite some time, we have been, trickling down really ever since September of this year. So in this sort of pullback phase, if you will, right? This is one expansion. This is really one pullback. So what do we naturally expect? Another expansion at some point because we're bullish. So that's just what the market structure is telling me right now. And in terms of counter trend, we have this high, we have this low, that high, that low, that high, that low, this high, and then we failed to make a lower low, and instead we made a higher high. So this will turn into our demand level higher time frame. So until we reach this level, which is 0.85 psychological level, I think we're still bearish. So we're going to continue to look for shorts. And obviously, we're currently in this trend here. We are, definitely bearish. Now, I know I say trade with the trend, and I know the higher time frame is bullish, but that doesn't mean, you need to only look for buying opportunities. The buying opportunities aren't really valid until we get down in here anyways. So if we find selling opportunities, and obviously these opportunities will be actual setups, not just forced trades, right? We don't trade just for the sake of trading. We have our rules, we have our confluences. If those are met, then we can get into position sell side, right? Into our buying regions, and then we can turn around and look for buys, right? So currently we haven't hit that higher time from objective at 8.5, so we're still trending short. Now we're still currently in this position here. These stops have been moved to break even a long time ago. 881, we've talked about that for a long time. Not going to discuss it. I already talked about it plenty of times before. So overall targets on this are 8.5, obviously. Lower time frame. We talked about this a few weeks ago. There was an area of supply in here, had a nice rejection off of that level. This is at break even. Obviously, we can see that we've made a lower low, a lower high, and a lower low. So that partials have been taken on this trade. And profits or what am I trying to say? Stops have been moved to break even. There you go. Then we created another area of supply in here. we pulled back up into that level, took a little bit of time, right? Kind of consolidated and then finally dropped. This has not been moved to break even yet. This position in the lower time frame position has not been moved to break even because we haven't taken out the significant low yet. So we're still technically kind of pulling back, right? This is just a big wide range pullback. Until we break this low, we're still in this pullback phase. So this is still the range from this high to this low. So we can trade within this range all day long. Once we break lower and we make a lower low, then this high would have produced this low, and that would be that range. So we would look to trade in that range next. So that's why we can't move stops to break even yet. So yes, we are still exposed to the market. If price just goes long, oh well, we lose the trade. But we are significantly up on this one and the one from up there. In terms of a setup, I don't see anything. I really don't. You know, we're kind of just chilling right now, right? We're chilling within this area of supply. I really don't see much on it right now. Price is pushing up, doing what it wants to do, but FOMC will probably help out in some sort of way. Not to say that it can't go long. If it wants to go long, it will. We'll see what the pound wants to do today. But overall, I think 0.85 is the overall objective. All right, GBP, I think CAD you guys talked about. I don't really see anything on this either. There's really nothing to force on this. We're in an extremely huge uptrend. I mean, CAD is, the Canadian dollar is ridiculously weak right now. But we're just continuing to trade, especially just, you know, with these lower time frames. High, low, high, low, high, low, high, low, high, low. It can go all day long, right? Just continuing to trickle. So if we scale into this, I mean, there's nothing to force, obviously, but there's really nothing to trade. I mean, if you wanted to look at something yesterday, you could see this as a clear sell to buy. We came down, swept equal lows, sell to buy into it. So into this demand, right? So after that sell to buy here, created a higher high counter trend. And then we can see the repricing right there. That would be that demand level. So you could have had a buy from that level yesterday. Price comes back up. We take out the previous swing point, stops move to break even, partials taken. And then maybe this level right in here, this imbalance, and then this sell to buy that we created right in here that swept this liquidity that went long could have been another position. You would have had a little drawdown, but stops would have been below the low, and you would have been fine. Other than that, guys, I don't see anything on this. We're still trickling up. Pound is still overall bullish, in my opinion. Canadian dollar is extremely weak. I just don't see much on it. I mean, maybe if we get something like this, if we get something like that, you know, some sort of sell side liquidity run of some kind, and then an immediate pushback to the upside clearing structure, then we may see some sort of retracement into sponsorship or demand to go long again. That's what I would wait for if that's going to be the case. So just some form of manipulation lower to go higher to then pull back and go long. Just kind of like what we had here, right? We made higher high, higher low, higher high, higher low, higher high. In the process, we swept equal lows, sell to buy, came into demand, pull back to go long. Same thing here. If we can take some form of sell side liquidity, just like we did here, this would be a sell. This would be a sell. This would be the buy, break of structure. This would be the buy, break of structure. Pulling back to mitigate, pulling back to mitigate, go long, go long. It's the exact same concepts, guys. That's exactly what we're going to be looking for. However, we don't know if that's going to happen. I have no idea what price is going to do. Price could simply just continue to trickle its way up. And then at that point, there would be no trade. But if I see something like this, then we can take advantage of it, right? Because we're still trading with the trend, and we would be sweeping some sort of liquidity. So it would be, you know, we would introduce institutional concepts, time and price, supply and demand within the overall trend. That's what we're attempting to do here. So GCAD, I don't really see much on it right now. GBP, Swiss franc. At this current time, I told you guys, remember, we came up all the way up into here, took out the previous swing high, right? And once we did that, we moved stop to break even, took some partials. So we came all the way back down, unfortunately, and we hit this position out break even. So this is no longer open. And then we have this one sitting at break even as well. So we're completely cleared on this trade. We've made some money. We've secured some partials. So now we can't lose anything. So the only thing we can hope for is price just to go long. So we'll see what happens with the news. We are completely safe here. But we can see here that we're continuing to trade up. Higher high, higher low. higher high, higher low, higher high, some kind, right? The trend is up. So equal lows, clear sell to buy, chop, 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 continuation higher. That takes, that is demand right there. So unfortunately, you have to place your stop below the low. Now you can place it right below here, but this is the low that produced this higher high. So technically we could trade all the way down into here, deeper down into here somewhere before going long. It would still be a higher high, higher low sequence. So that's why stop loss has to be placed below that low. It's the most appropriate. So we got into that position very nicely and then broke counter trend structure here with this move, pulled back into a lower time frame demand. I know it's not clear here because I'm just on the 1 hour time frame. But we got in pretty much right there, and then we started to accumulate. So it did take quite a while. We finally made a move yesterday. We were able to secure partials, move stop to break even. Now prices come back down and hit us out, break even. So didn't make much on this. We're holding this one break even as well. I don't really see anything else, to be quite honest. There's nothing else lower time frame that I could play off of, unless price just absolutely tanks and we come into our higher time frame demand. If we come into our higher time frame demand, then I'll look for longs from that level. And if we come a little bit lower, this would just be an overall pullback for continuations. So how far are we going to pull back? If we do fall, how far are we going to retrace? Down into here or down into here? One of those two levels. Lower time frame demand that we came into demand over here with to maintain its structure. Higher high, higher low, higher high, higher low, looking for a higher high. So those two levels would be our higher time frame levels if we push lower. If not, we'll probably then just continue to trickle higher. That's what I hope we do, but we'll see. GBP USD. So again, I don't really see much on this. And because of the fact that, AUD USD came into our overall take profit and our higher time frame supply level, Euro USD came into our higher time frames supply level. I do think we can still go long. We're still holding this up until 1.0950, all these trades. However, we did take partials at this level because this is a level in which price could potentially reverse from us. Same thing with AUD USD. This is a level in which price could potentially reverse from us, and we are seeing some sort of reaction right now, which is why we only had, just a very small trade.
And you can see, Nate, if you go back to sterling, if you go to the daily time frame, you'll notice the old low in market structure that we traded into yesterday with previous day's high, traded right into that old low to the left.
Over here.
Right there, that little flip from demand to supply, that was never mitigated. And then we have that form of kind of internal liquidity, right, where we have that supply created, the sell off, and then price retrace, but never touched retested that previous low there. So that engineers some liquidity to ultimately be run out. So is it a coincidence now, guys, that Nate is showing you across the board on these majors that GBP USD, AUD USD, Euro USD, NZD USD, all of these pairs have kind of hit these higher time frame levels right prior to FOMC? Is that a coincidence?
Nope, not at all. Not a coincidence. It happens on purpose. Every single move in the market and its timing is perfectly planned. They do this on purpose. So that's just why, since we've come up into these higher time frame levels, what are we going to do? Is the news going to propel it long, or are we going to have maybe an overall pullback in the market of some kind? Who knows? We've come up into these levels, higher time frame. We got to be careful of trading the lower time frame now. Not to say that we can't continue to trade it like AUD USD here. We're continuing to make higher highs and higher lows, right? Higher high, higher low, higher high. What do we naturally expect in an enduring uptrend? A higher low, right? Yeah. So that would be, this demand has already been taken care of along with this demand here. So the most recent structure point is this sell before the buy. So maybe somewhere, down into imbalance in here. So maybe into our last point of demand, we could easily come into that level with news and continue long. However, we've come into these higher time frame levels across the board. So with news, it could be the excuse to propel it lower, to take sell side liquidity and have an overall pullback in this huge uptrend that we're seeing.
Yeah, and there's nothing wrong with keeping these lower time frame levels of demand, as levels of interest to potentially be looking for a reaction from in a lower time frame kind of break of structure. But we're just saying exercise caution with this, because all of these pairs are in alignment trading into significant levels where we very easily could see reversals and then a higher time frame retracements. especially given the fact that we've just been kind of trickling up and unidirectionally swinging for quite some time now. Don't you think they might want to take some sell side liquidity now?
Right. And they could easily do so. But we don't know that.
Right.
We're just continuing to trade with this trend here until it breaks. If it breaks, great, then we can look for higher time frame retracements into overall levels. So, we can see here that we came into that level. This doesn't mean that, this is a supply level, but again, this is just, there's so many supply levels here. This is a supply level here, 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 here. There are tons of, these are just intra-trend little tiny supplies. So that's why we can place or take profits when we're buying at these levels, just in case we actually do see some form of, not necessarily a reversal, but more or less, a retracement, higher time frame could come back down into there, who knows, something like that before continuing higher. So these are areas in which price could react from, and surrounding news events could be more highly probable. But that does not mean to trade short here, guys. We're not telling you to go short. This is all intra-trend supply. This is the entire trend, right? So there's no telling whether we react here, 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 wherever, right? This is all just low resistance liquidity, just trickle-like. So there's no telling where we're going to stop. So we just need to continue to trade with this trend here. Having the understanding that we did come into higher time frame levels across the board to some degree doesn't mean we're going to reverse, but we just need to exercise some caution before continuing to trade. So we can see here that we're still following our structure: higher high, higher low, higher high, higher low, higher high, higher low, higher high. So who knows what will happen. We've already taken profit on this. Great 1 to 6.32 risk to reward there. Had that demand level hit. We finally hit it over here on the 1st of December. So we made that higher high, trickled down, equal lows, sell to buy, clear sponsor candle, 10 in the morning EST. That's close to London session close. It's in the beginning phase of New York session. Sell to buy mitigated our level of demand. Talked about this level. Beautiful entry, 1 to 4.5 risk to reward. And this is still being traded to 1.25. So we're still looking to push up a little bit higher on this, hit that psychological level. But yeah, we'll see what happens. Anyways, so we had a couple opportunities. There were equal lows in here. Sell to buy higher high. So we have a higher high, we have a higher low, we have a higher high. I was looking, there was a lower time frame area of demand in here. It's on like the 15-minute or the 10-minute or something, so you can't see it on the hourly. But we bought it right here. When was that? Last week, the 5th, maybe 2 weeks ago. So we bought it there, and obviously we came down, hit our stop loss. But that's okay, guys, because first of all, we're playing from lower time frames and then moving out to higher time frames. So we have multiple levels. What if price just continued with lower time frame trend? We can see equal lows were swept, sell to buy higher high. So what if we went like higher high, higher low, higher high, higher low, higher, and we just did this, and we kept going with that trend. Who knows that we would break, but we actually did. So we have higher time frame levels now. So if we broke and closed below that level, doesn't mean we're bearish. It just means we're seeing a deeper pullback before continuing higher, because we still are higher time frame bullish. So now this becomes more of a higher time frame retracement to go long. So we had that level and we happened to react off that demand. If price were to have come lower, then we would have traded it from our last point of return, meaning this is the last point. Really, this is the last point in which price could come to before breaking structure to the downside, before then probably retracing, probably back down into this huge imbalance. That's a pretty big retracement there. So we wanted to just continue with this trend. And if it broke, well, then we look at the higher time frame and look at it from this standpoint. Boom, 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 boom. See a deep retracement to go long again, probably. So we still are overall bullish. We just need to have an understanding of higher and lower time frames to trade from. So we just have multiple levels. Yes, I lost here, whatever. I don't really care because I won on this trade big time. So that win takes care of that loss, no problem. But how did I know that we weren't going to, or how did I know that we could have? There's no telling on whether we would come into this level and go long, or we would have a deeper retracement. There's no telling. So you just have to place those lower time frame levels. If it breaks, look at the higher time frame. You have that level. If that breaks, then we have this clear sponsored move. Sell to buy into demand, equal lows. And then this is your structure. Higher low, higher high. It would just be a deeper pullback for a higher low for a higher high. So either the start of that sponsored move, and then we also have a lower time frame demand in there. Could have played out. So at this point, these two are probably invalid. I mean, you can keep them open if you wanted to. I mean, this is still a valid level. However, this is a high, this is a low, this is a high, this is a low, this is a high. So if we went like that, I mean, yeah, we could go like this, but it doesn't look that pretty. You know, possibility, you can keep these open maybe on half risk. But if we come all the way back down here and close below this structure now, because this is the low that created this high now, so this is the range. If we break that structure, we may continue lower and have a deeper pullback. Because usually what you don't want to see is, you know, if you're trending up, you don't really want to see price, you know, break your structure, come into some other level like here or like here before going long again. I mean, it's a possibility. This could just be a one expansion, pullback, one expansion possibility when you're still bullish. However, when you're playing off of swing points, you really don't want to break your swing point, and you don't want to come into other swing points that have already made higher highs from, if that makes sense. So we'll see what happens with the news event. Going to sit on my hands for now. Still holding this position. Price has come above our previous swing point. Stops moved to break even. Partials have been taken. Holding to 1.25. All right, let's see. GJ. I believe that's our other one here. GJ doesn't really make much sense to me, to be quite honest with you. Price doesn't even know what it's doing, right? It doesn't know what in the world is going on. I guess you can say we're bullish. I mean, pound is still higher time frame bullish here. You know, what we can see here is a beautiful retail pattern that screwed retail traders, and that's what we want to see, right? We love when retail loses because they deserve to lose. You can see the wedge pattern here. We broke out, enticed the buyers above, you know, the breakout essentially. So they bought it, and I hope their accounts were blown because trading retail is the most ridiculous thing I've ever heard in my life. Big, huge buy to sell, right? Swept all that liquidity, sell side and buy side. So enticed buyers, came back down, enticed sellers, hit the stops of the buyers, came back up, hit the stops of the sellers. Great. Now we understand that institutions are involved in this move. Now we, since we are patient, now we can be involved in this market. Us, all of us smart money traders on this call today, right? All of you guys are smart enough to understand retail doesn't work. And retail is, you know, one of the means by which institutions get better pricing in terms of their own trades. So understanding that, we're bullish on GJ, right? Clear manipulation lower, clear push right back up to the upside. If we were going short, guys, we would not see this huge move followed by an immediate reversal back to the upside. If price was going to go short, we'd probably just, you know, kind of trickle our way up. The law of effort, right? You guys taking our course. Law of effort. We taught you guys this. So higher time frame, this is our area of demand. I know it's not pretty. I don't know why it looks like this. I'll have to go back and look at what I drew. But anyways, we're still making higher highs and higher lows. Higher high, higher low. Higher high, higher low. In the process of making this higher low, we swept equal lows. We've come into a level of demand and we've reacted from it. So now it's sort of just in a choppy range, right? We're not really seeing much on this. So I really don't know what's going to happen, to be quite honest. And when I don't know what's going to happen, I just stay away from it. And we can see these wicks in here took out previous highs, right? So that was sort of a liquidity run. Maybe I guess you can consider this a higher high, higher low, since we failed to make a lower low and then another higher high. It's not really a higher high. We didn't really close above this structure. We really need to see sustained movements above it. We kind of just wicked above it and pushed back down into the range. But, you know, that's just why it's tricky. Really, I really don't know what's going to happen. I think that we can continue long overall. We may see a little bit of a pullback here, but overall, I think we're still bullish. So I really just don't know. It's not very clear to me, as I mentioned before we got into these charts today. So, I mean, do with it as you wish. You know, if we see some form of, you know, liquidity run to the downside and go like that, sweeping all this liquidity in here. I mean, we do have a little bit of a head and shoulders retail. That's sort of we're taking right now. So if we can get, you know, a push right back to the upside, well, then maybe some sort of pullback to go long would be in order, or something like this, right? Sweeping sell side, breaking counter trend structure, pull back to mitigate and go long again. We could do that. This would be higher high, higher low, and then we just wait for the higher high. So that's something we could see, but as of right now, it's not pretty to me. So I'll just kind of just stay away from it, to be quite honest. I know I saw some in the chat. People were looking at EU. We've already talked about EU. I don't really want to go into it today. Overall, we're still bullish, but we got to be careful with FOMC. Let's just say that. We've already come into some areas of supply, which are these two black horizontal lines. We are still in these trades. We're still in this trade from here. So higher time frame, very quick. Higher high, higher low. We're still in this trade here. Had two trades. And all of you VIP members can attest to all of this stuff. I'm not just sitting here making this up and pulling this out of my butt, right? We had a level here. That was our first demand level. Second demand level was in here. Why are these demand levels? Because we swept liquidity, higher high, higher low, higher high. So we swept liquidity, sell to buy. In the process of doing so, created these two demands. So we had our initial reaction from it first. Great trade. Broke above the previous swing point, stops moved to break even. Partials have been taken, came back down, hit me break even. Oh, well, it happens sometimes. But in the process of doing so, we just had a deeper retracement. Higher highs, we expect a higher low. So we come down into our other demand level, have a wick entry, beautiful trade, and just missed our take profit, but we're still holding the 1.07 for a nice 1 to 6. And we can also see here, this is a fake out of the head and shoulders. Shoulder, head, shoulder, and I push up again, sell to buy, just like GBP USD. So clear sponsored candle. So I would probably say that this is one expansion. So if we came back down into these levels, I would still look to buy again from these three levels. We have the start of the sponsored move, imbalance, and then lower time frame demand. So once that occurred, we can say we made a higher high. So what do we expect? A higher low. Obviously, we didn't get the retracements into here, but we have lower time frame trend as well. Couldn't we just continue with this lower time frame trend like we did here? Exactly. We could easily do that. We don't always have to retrace higher time frame, but if we do, we understand these are still valid levels to continue to buy from. So let's look at the lower time frame trend now. You can see here on this time frame, higher high, higher low, higher high, higher low. This higher low came into this demand, created a higher high again, created a new demand here. So we bought it from that level. Had a little bit of drawdown, but where are stops placed? Below this low here. This is the low that generated this high. So this is the entire range. And like I said before, we could come all the way back down, take out the low of the demand, and still maintain bullish structure because this is the swing point of last point of return. And that's exactly what happened in here. We accumulated, we took out the low of the demand, but we didn't take out the low of structure, and we continued. So everyone who was placing stops below that low would have gotten stopped out, but obviously we didn't because we understand proper stop loss placement. So we accumulated, had a little bit of drawdown more than expected, and then we rose, right? We broke counter trend structure, we pulled back, and we continued. And so we just continue to play off the structure. So we're still in this trade from here, which is this risk to reward right there. Partials have been taken, stops moved to break even. Then what we did do is once we broke this structure here, made a higher high, broke the counter trend, we created this sell to buy and made another higher high. So now we're following this structure right in here. It's simply put, this structure, or really this structure is within this structure, which is within this structure, which is within this structure. See how we can like see different time frame structures and play off the different levels. So this is why it's okay to place multiple levels and positions. Because if one loses, well, then you have the higher time frame levels to get your back. And as long as one works out, the aggregate positions would probably be in profit because we have good risk to rewards here. So we bought it here again with this sell to buy to continue. Stops are below this low. This is the risk to reward for it. So we come back down, a little bit of drawdown a couple of times, and then we finally make a move to the upside. And we came into our higher time frame level, just like we did on GU, AU, and all the other US dollar-based pairs. It's like I said before, it's more of like, an intermediate supply level. I mean, there are supply levels here, 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 here. I mean, everywhere. But we came into that level. Just go to the 4 hour again. Came into an unmitigated supply level at the same time we came into other supply levels. So that's, a good sign to, be looking to take some partials off the table, especially because we made a higher high, a higher low, and another higher high. So at that point, you would move stops to break even anyways and take partials. So not to say that we can't continue long, but remember, let's just wait for FOMC today, see what happens. So we're still in these positions. This one down in here, I would say this is still valid because you can classify this as one push, one pullback, one push. You could get a pullback, sweeping all this sell side liquidity in here, coming down into demand after the accumulation and continuous structure. You can see how that would work. If we come lower, I probably would still place these trades because we're overall bullish and we're just waiting for sell side to be taken into valid levels. And if we fall again, then oh well. What we'll look to do is we'll then just look to scale out, and maybe we'll look to trade, somewhere in here, right? And we'll just keep going from there, right? So it's okay to lose trades. It's okay to not be perfect on every single position. Just like we had on GBP USD, it's okay that we lost in here, right? Because we have another level here and another levels down in here for higher time frame retracements if we were to get them, which I had no idea that we were going to go like this and retrace this far, which, I mean, it makes sense because we're, higher high, higher low, right? But I didn't know that we would not respect this level, nor did I know that we would not come into this level here. So we have multiple levels, and at least one of them played out very well. So, but they have to be valid. You can't just like place multiple levels at anywhere. You can't just place one here and then one here and then one here just for the sake of placing them. They need to be valid levels to begin with. But it's okay to place them and not worry about losing, because yeah, you're going to take some losses. But at the end of the day, your loss or your wins are going to outweigh your losses, most likely, if you have good risk to rewards. AUDJPY, I think someone had a question about that. We still are in these positions from down in here. So just taking forever to move. Yes, we are still counter trend bearish here. We are, but we've come up into this trend line once, twice, 3, 4, 5, 6 times. How much buy side liquidity is resting above this trend line? So much, right? Retail is selling in here, and you know what that means. Price is most likely going to make a move up at some point, right? Higher time frame, we are bullish. We are making higher highs and higher lows. Higher high, higher low, higher high, higher low. The most recent swing point is right in here that we came into imbalance with, that we called out before. That's why we have this risk reward set up. This was back in October of this year, so 2 months ago. So we came into that level. Why is this level valid? Well, not only is it in balance, but it's a clear sell to buy that swept this low here that came into higher time frame demand. Higher high, higher low, higher high. So we didn't actually expect a higher low. Great. Now where's the counter trend? Low, high, low, high, low. Break of structure, counter trend, higher high. So now what we're doing is simply just pulling back to hopefully make another higher high to start this new trend, to ultimately take out this swing point to come into our higher time frame objective of 100. That's a higher time frame level. So in that case, I think this is clearly just a retracement. So with that being said, this level of demand in here that came into this imbalance, we can see this clear sell candle, sell to buy, that swept all of this liquidity in here, right? Sell to buy, and then we started to make the move higher. So within this level, there are areas of imbalance, which is why we had those two levels, 92 and 91.7. I think that's right, what it was. Yeah, 91.7. So we're having the reaction, and we're starting to push up ever so slightly, which is a little concerning to me because it's not, we didn't quite come into it and then just make a move. That's what I would have liked to have seen. We're still kind of trickling up, but we are respecting lower time frame bearish structure. However, we have buy side liquidity with this trend line, so I do expect price to go long. And I have to just respect the structure, right? I have to just trust my analysis. So lower time frame, we can clearly see that, traders are trading short with this trend line, right? Price comes into the trend line, now they're selling. Well, right now we're kind of in this lower time frame uptrend. We have this level of demand in here that formed last week on Friday that cleared this low and this low. So a clear sell to buy with the news event that occurred last Friday. I think it was with CPI. So it still affected other currency pairs. But we have this head and shoulders, shoulder, head, shoulder. So not only is retail selling upon this trend line, they're probably going to be selling below the break of this neckline. So that could come into this level of demand, and then we can make a move to the upside. So that's something I will be looking for. That's an area of interest for me. But we'll see. It's just I wanted to show that. Other than that, guys, I really don't have anything else. Let's see what other pairs you guys have. I do have to be off by 9 o'clock today. I do have a meeting I need to get to. So we only have 14 minutes left. So let's take as many questions as possible. Longest y'all have gone on a winning streak? I don't know. I mean, we go on winning streaks all the time. We go on losing streaks on occasion. Just happens as traders. I think my longest winning streak was probably like 2 weeks, just constantly winning trades. But obviously, you have to still be humble. You have to still use good risk management, even when you're winning, because you never know when your next loss is going to occur. Let's see. GBP Chef, higher time frame limit orders. Will you leave them in for FOMC news? Yeah, I mean, all the levels that I currently have, there's no point of taking them out for news events. We already know, and I said billions of times, news is used as the excuse to come into levels or take liquidity or do what it was always going to do anyways. So it doesn't mean that, news events coming around, we should just delete our levels. No, the best thing is to keep the levels because they're most likely to be hit. It's just creates the volatility to come into the levels. Doesn't mean that it's going to come into the levels precisely. The news event doesn't mean this, guys. Let me show you. The news event does not mean this. The news event does not mean that, we have a level, so with the news, it's going to come into that level and then go up. Price could, whatever the market is wanting to do, wherever the liquidity rests, wherever the objectives lie, the news is just used as the excuse to do that. So is the excuse to push price into our higher time frame levels? Is the excuse to continue with the lower time frame trend? Is the excuse to take buy side sell side liquidity before running higher? Who knows, right? Overall, we're bullish and we're going to expect further continuations at some point, but we don't know what the news is going to do specifically, but it's always used as the excuse to do what it was always going to do. So even if there was no FOMC news today, it would do the exact same thing it was always meant to do anyways, with news or without news. News is just used as the excuse to inject more volatility for price to move faster, essentially. So it's a good question. I'm definitely leaving those orders in, Gary. Yeah, for sure. Good question. Christopher Lewis. Yeah, that's correct. Yeah, that's a good way of looking at it. If you want to look at it in terms of fundamental data and numbers. Yeah, that's right.
Yeah, it still doesn't tell you where to enter a trade. And I don't know where you're pulling 25 basis points from. Rates in Japan are negative.
This is utter nonsense. You're quite clueless, aren't you? AJ, yeah, talked about AJ. AU, yeah. So AU, yeah, we've come into that higher time frame level. We could still could see higher time frame prices, continuations with the higher time frame. However, price is starting to react off that level. I just want to wait for FOMC today. I'm just going to sit on my hands for today. AJ, JPY, 4-hour supply zone. Do you think it will react to it? Potentially. We came into supply. We are still counter trend bearish. However, we have to look at what retail's doing. Retail is selling the 6th time off that trend line. So there's so much buy side liquidity. News could be used as the excuse to go run that liquidity higher. And we still are higher time frame bullish. And we, remember when I talked about those specific levels, we came into our higher time frame demand level, right? So right in here, AJ, yes, we did come into lower time frame supply, sure, but we've also come into higher time frame demand. So wouldn't we naturally expect once price comes into this level for us to finally move higher? Yeah, you can be selling in here. Supply in here. We haven't come into this level yet. So this low didn't come into it. This low didn't come into it. This low didn't come into it. So we can be looking for shorts. Oh, finally we did. Great. Now I don't care about any of this stuff in here. We need to be moving higher. Taking buy side liquidity as well. So yeah, I'm not saying that price can't come into this sort of supply level or whatever and react to go short. I'm just looking at it from different perspectives. I'm looking at it from higher time frame structure. Higher time frame demand. Higher time frame always trumps lower time frame. Trend line. Retail is shorting. What do we expect to happen? Retail loses. We don't want to go with retail. We want to be buying against retail. Head and shoulders pattern. Price sells off. That's another retail head and pattern to go short. We want to be taking it long. Counter trend. We're bullish in here. We had a clear sell to buy. I mean, this is a valid level in my opinion. So not to say that it can't work out. I'm just saying, you know, consider other options. Consider what price is doing besides just coming into that supply zone. What was the biggest breakthrough for you guys as traders? Experience. I mean, to be quite honest with you, experience. It really was. And you're using proper risk management, managing my psychology was huge. You know, doing just the little things right. It just comes down to time, guys. I mean, we can't expect to get rich quick. We can't expect to, you know, practice trading for a month or two and see success. I mean, it takes months to years. I mean, I was failing for a good 18 months. It's a year and a half straight of failing and failing and failing. But I never gave up, and I continued to learn because your brain is always soaking in information, whether you realize it or not. And, you know, at some point you keep practicing, you're going to get it. You just can't quit. So it's really just experience. It's time. Doing the little things right. You know, psychology is huge. Risk management's huge. So, yeah, hopefully that helps. Let's see what we have. 25 basis points. Hilarious when someone tries to come in here spouting nonsense.
Yeah, it's like, why are you on the live session then? You know, exactly. You're the one jumping on someone else's live. It's like, if you think it's nonsense, pop off. Your mom's probably has breakfast made for you.
Right, exactly. All right, we're here to try to provide value, guys. We're not here to start arguments. We're not here to deal with children. Okay. We're here to help you guys make some money and learn this skill to help you make 6-7 figures. That's what our goals are. That's what we've been able to do for a lot of our clients. And that's what we do ourselves as well. So I appreciate you guys, you know, coming on, asking questions and doing all that stuff. You know, it's great to have you guys on. I see a lot of familiar faces. I like the consistency, you guys hopping on our lives. Hopefully it's, you know, really helping you out. If you guys have any questions, feel free to come and ask us. You know, we're not, even if you're not a part of our VIP community, I will still answer your questions. I'm not going to be that guy to say, oh, you have to join before I can help you. No, I'm going to help you guys out. And we do these for free anyways. But I don't appreciate when people come on and start talking all this bullshit. You know, it's just get out of here at that point. I have no problem. Like if you disagree with my analysis or you disagree with something I'm telling me, you know, talk to me about it. You know, we can discuss it, but don't just come on and say random bullcrap. So actually, yeah, that guy's out of here. All right. What other question you guys have? I have 6 minutes. For a prop firm challenge, I need to gain 8% in 30 days with my current win ratio. I'm getting there just slow. I'm trying to do 0.5% risk reward trades now. Any advice for hitting target more often? No, I mean, I think your risk management's good. I think half risk is good. 8% is achievable. However, this is what I say to everyone. You know, are you currently profitable right now? And this is just, you know, don't answer this question, but this is what you have to ask yourself. Are you profitable right now? Have you been profitable for a good, you know, 2, 3, 4, 5 months? Have you seen consistency in your own trades? If the answer is yes, then great. You know, prop firm challenges are probably what you're looking for. And that's, you know, definitely a good thing. However, if the answer is no, I would highly recommend not trading it, trying to trade using a prop firm challenge, because if you're not profitable right now, you're probably not going to be profitable taking a challenge. Many people look at challenges like as a means to get funded and make a lot of money. But if you're not already a decent trader, you're not going to most likely not pass the challenge. And even if you do, you're most likely not going to, you know, keep that funded account. So Nigel, I have no idea, you know, where you're at in your trading. However, those are the types of questions I would just advise you to ask yourself. But yeah, I think half risk on those trades. I think, you know, over the course of a whole month, 30 days, using half risk to 1% risk. Yeah, you could definitely pass it, you know, with good risk to rewards, with patience. You don't need to pass it in a day or a week, you know, take the full 30 days if you need to. Just go for highly probable levels. I mean, hitting targets more often just comes down to having the right confluences and meeting your rules for each trade. Let's see. How much are our services? That's just stuff that we like to talk about on a call that we'll have. So if you guys, if anyone's interested in learning more about this skill set and, becoming more of a professional, well-rounded trader so we can help you get funded and stay funded and everything, just visit our website, arielfxtrading.com, book a free call with us. It's completely free. Just want to make sure it's the right fit for you and the right fit for us as well.
Yeah, or hit us up on Telegram, Nate, if you want to drop our Telegram in the chat.
Yeah, sure. We just don't like to go over prices here. We just like to discuss that specifically with you guys who are interested, who are serious about it. And obviously it's good. We like to do these calls just because, obviously we don't want you guys to waste your money on something that it may not be the right fit for you, right? So we're not just going to say, oh, buy our services now. And then it may not be the right fit for you. Maybe our strategy is not something you resonate with or something like that. I don't know. We just like to make sure it's the right fit before coming on board, just so it's the right fit and you're coming into something with a clear head. That's what we like to do. Bro, can you please talk about strategy? Well, that's really kind of discussed within our course material, within our VIP service. We can't really go over our entire strategy on this live session. Smart money is our strategy. We use smart money, supply and demand, a little bit of Wyckoff here and there. Let's see. Tips on active trade management. Don't risk more than 1% every time. Don't do it. Use position size calculator. Look it up on Google. Helps you with your exact lot sizing for your account size, for the pair you're trading, for how many pips your stop loss is, all that good stuff. Exiting's been an issue. This is what I say. This to keep it the most objective. It's just because everything is going to be different. So it's hard to give you an exact blueprint of exactly what to do to exit your trades. If you're buying, where could price reverse on you and sell off? That's where you need to be taking your profit. Where could you build confluence for a sell? If you're buying, where could you build confluence for a sell? Obviously, you're not going to be selling because you're buying. But what I'm trying to say is, where could price reverse on you? Where could price actually sell off from you? That's where those, take profits need to be. Because at that point, if you're just going based upon a 1 to 3 or 1 to 4, 1 to 5 risk to reward, you're not going based upon what the market's showing you in terms of price action. What if the market's showing you that price can move significantly higher before coming into a supply level, for instance, before pulling back and reversing on you? Well, then instead of hitting a 1 to 3 or 1 to 4, because you're basing it off of just a percentage based or numerical value, you could have easily had maybe a 1 to 6 or 1 to 7 before price reverses on you. So at that point, you need to look at what the market's telling you to do, not what the numbers are telling you, if that makes sense. All this stuff is gone over in depth within our course material and all that stuff. It's very hard to give objective answers because nothing is going to be the same. Every trade is different. How do you confirm reversals, daily structure shifts? Again, I don't really have the time to go over that today. Maybe we can talk about that on Saturday's live session. It's really just looking for higher and lower time frame market structure. Definitely our YouTube videos would help. Our course material would help significantly when we talk about all that stuff in our VIP services. It's just a lot of information to go over to answer that question. Not a bad question at all. Maybe I can address that on Saturday's live session because I can have more time to do so. Are you guys selling those hats? I guess we haven't really thought about that, but usually if anyone joins our service, we can send you guys a hat for free. Show what we do. But
private members, just hit us up if you want one.
Yeah.
I know everyone likes them.
Yeah, it's pretty dope. How can I get into the inner circle? Just book a call on our website, Ariel Fx Trading. I'll type in the website here, but I do have to hop off. It is 9 o'clock. Hopefully you guys enjoyed this live session. If you guys are good to go, have a great rest of your week. We will be on Saturday, and we'll see you guys all then.
Absolutely. Cheers, guys. Appreciate it. Appreciate you all.
Yeah. Thanks, guys. Thanks for your time today. Really appreciate you guys. All right. Well, we'll talk to you guys later. Cheers.